Hello, folks. Brandon Chapman with you today. It's another Monday video for TheoTRADE. It is May 6th, 2024. And boy, the market rallying today. Futures right now up nearly 1% at 0.95%. The SPY finished 1.03%. And if you look around, you think, wow, this is pretty exciting, except for the fact that, look, it was a low volume melt up today. Sorry, /ES. And why do I say that? Yes, we're up 1%, but look at the volume today. Less than 1 million contracts traded. That's 961,000. The 20-day average is at 1.6 million. Is this the bullish day that it looks like? Are we poised to retest prior highs? Again, this is where we got to take stock. We got to take inventory. What's the trend of the market right now? Well, look, we did have a low. Looks like we formed a higher low. We're forming higher highs. Yes, the trend people are getting really, really excited right now. We look at the fib retracements from high to low. Where do we stand at the moment? We're testing that 61% retracement, maybe en route to retesting the prior high. It's a possibility, folks, that we may retest our highs. Now, my theme is slightly more bearish, or I guess not exactly bearish, but where to look for bullish opportunities at the moment. But the reality is that we're not out of the woods yet, right? We've barely made back 61% of what we lost in the downtrend. Even getting back to 53.40, 53.50 only puts us in a neutral longer term trend. So we have a lot of work to do to kind of repair what's happening, okay? And the fact we have lighter volume shows we're losing some interest. In fact, the 3 days that we've been up, all have been below average in terms of volume. So frequently when you see a low volume melt up, the end point is going to be a breakdown. And so we have to play for that possibility that the market may see more volatility in the near future. Now, what's causing this? Certainly last Wednesday, the Fed kind of laid out, we're making some progress on inflation. Powell's, we're not going to raise. We're not ready to cut. And then Friday's jobs data. What a more bullish result than to miss the jobs number by a significant margin. And but again, we're back to what's bad is good and what's good is bad. Everything's hinging on the Fed being easy. Jerome Powell being the easy. Oh man, or Fed officials are easy, right? It's like that old movie, Earth Girls Are Easy. But Fed officials are being easy right now, right? They want to provide accommodation, but the reality is we're still faced with the inflationary fight. And of course, things like oil, our oil prices poised to head down. We're firming up here. We've had a little bit of a pullback. Do we scream mission accomplished? Well, my goodness, if we look at the term structure of oil right now, we are firmly in backwardation, which suggests that risk is to the upside in oil prices. And yes, we still have conflict in the Middle East. Yes, Saudi Arabia raised oil prices on the people they're selling it to, for example, in Asia, maybe China and other countries. The fact is that oil prices are poised to potentially break to the upside. Doesn't mean they can't go down. Agricultural prices, let's just look at DBA here. DBA's made a bit of a pullback off of significant highs. Are we poised to continue lower, or are we poised to reverse and head higher? Natural gas /NG futures breaking out on Friday and continuing higher and forming higher lows and now higher highs. Everything hinges on what's going to happen to oil production. Again, when you produce oil, you also produce natural gas. Problem is you can't give natural gas away right now, depending on where you're at. Permian Basin, to be specific. Prices flipped negative for one point like a couple weeks ago, right? Just take my daughter, please, right? Just take natural gas, please. We don't know what to do with it. And so what we're seeing right now is natural gas prices are going higher because oil companies, again, they're producing natural gas potentially in some areas at a loss. That's a big deal. Does that mean they curtail oil production in order to try to reduce the negatives of natural gas and reduce the inventories of natural gas? Again, natural gas prices making a nice move. Companies like Range Resources today up nearly 4% on the session. Notice these are what? These are commodity. This is a commodity company, right? Look at the top performer in the S&P 100, not Amgen, Eli Lilly, right? NVIDIA followed up at 3.77%. We may yet retest our prior highs. Nobody is selling NVIDIA yet. Okay. We have earnings coming up here in a couple of weeks. But guess what? Range Resources beat them all, right? Let's look at silver prices. Silver price up 3.5%, up almost as much as NVIDIA. It would be the third best performer in the S&P 100 today. The fact that precious metals are performing so well, look at GLD. GLD is up 1.05%, basically equaling the market's performance. GLD is a proxy for the inverse of the dollar, right? GLD goes up a percent. You're saying dollars down 1%. And I'm not talking about the dollar index that looks at price. I'm talking about real value of the dollar diminishing 1%, which basically says, look, all of the market's gains today were on what? Dollar weakness. And that's going back to the Fed, right? The Fed and the jobs numbers. Everyone's starting to say, okay, the Fed is easy. They're going to start to accommodate. We priced out, so we only had one cut this year. Now we're maybe looking at 2 rate cuts. Can you give me 3? Can you give me 4? I mean, JP Morgan seemed to think the Powell was really easy earlier in the year with the thought process after its earnings, they would get 6 rate cuts by the end of the year to meet their profit target. Sorry, this was back here in January. The problem is inflation going to accommodate our prices of agriculture and oil? Looks like jobs may accommodate. I'm sure Powell was giddy when he saw that we produce fewer jobs and lesser income. That's what he's been aiming for, right? Feels like we can raise rates to 5.25%, 5%, and somehow we're going to stick it to the people that are working stiffs out there. We're going to make it so they have fewer jobs and less income, and that's going to solve our problems. Meanwhile, we're going to funnel all the money we want out the back end and create very easy credit conditions for all the big boys. That's what we've gotten so far. But is the Fed going to follow through and accommodate by cutting rates? And it's going to be a very, very difficult task. But in the near term, it doesn't mean the market can't see a little bit of lift right now. And if we look at the VIX today is testing about 13.5 down here. We may push the lows again. Friday, the VIX was sold. Well, was it sold? What was sold on the VIX? Well, let's look at skew. Skew on Friday actually ticked higher. So yes, we saw SPX options selling. But guess what? We also saw what? We saw increase in hedges. So maybe the selling that we saw that caused the VIX to decline since skew went higher, we saw a bit more calls being sold than puts being sold. And we saw puts being bought to some degree, right? Hedges being implemented. That's why the skew went higher. This is not the all clear signal you're looking for. You want to see that as the VIX is going down, skew is falling. Frequently, you'll see the skew will decline first as put options are being bought to hedge portfolios. That's not what we're getting. We're not getting on either side. We're not seeing the significant hedges as we're liquidating shares and buying puts to cover our exit. We're not seeing NVIDIA come down. NVIDIA is going higher. People aren't selling, which means what? If we're looking at the SPX, we're probably not at a bottom yet. Now, certainly things can change, right? If we continue to see rate cut odds begin to reduce and we can continue to see this low volume melt up. We got this previously back here for 5 months, by the way. Finally get a little break in the buying, and we're melting up again because Powell thinks, hey, fewer jobs, lower wages is a reason to start to ease and create inflationary pressures again. And look no further than gold and silver today to be able to see that. Gold breaking out of a descending wedge, falling wedge. Near-term expectations, the high at 222. So what do we expect right now? When you think about areas of strength, well, certainly you'd probably expect gold to outperform here in a retest of prior highs based on what? A declining dollar. And if we're seeing gold rise with maybe this kind of easy monetary policy coming out, what does that mean for silver? And in fact, on Friday, Blake and I, during our Theo live session, which is Friday mornings before the market starts. Feel free to check us out on our live feed through YouTube and other places as well. Silver's up 3.5%. Silver retesting 27 would be not unreasonable. Okay. The fact is we may see gold stocks, GDX. Now gold stocks did kind of fade here. Right now we're in the presently consolidating, right? We may see a breakout here. Again, if stocks are going to perform well, gold's performing well, silver's performing well, Gold stocks may beat all of them. They're up 2.3% today. I mean, that would be what? That would essentially be the maybe sixth or seventh best performing stock, and this is an ETF, right? In the S&P 100. Certainly an area to consider as an area of opportunity. And today in GLD, we'll just look at this breakout and some option activity in GLD today. This was in the 24 May expiration. 24 May expiration. Let me switch this to implied monthly volume at open interest. 5,900 contracts at the 220 strike, right? Mostly bought. We're seeing buying activity come into gold. And I'll tell you that frequently option activity in gold generally proves out pretty dang well. Not 100%, nothing is. But when you start to see an influx of money into gold on the option side, it's generally a pretty good sign. And getting the breakout today, there's a lot of confluence of events, technically speaking, that says, hey, we may retest our prior high back here at 222. You can easily construct spreads in here as well. Notice how volatility is rising. 18 days. What if you went out, for example, 46 days to June? Is volatility still rising? Yes. You could buy at 220 and sell at 225. You could buy at 225, sell at 230 in GLD. Bottom line is 230. Well, we're way the heck up here. 225 might be more reasonable. But again, the point being is you can buy the 15% vol, sell the higher volatility at 1577. You construct a relatively cheap spread for about $1.30 on a $5 spread. That's not a bad deal. Okay. We walk through in silver, for example, a spread, and during my session, we have a kind of a log we track off the lows here. We're finally getting the breakout. We walk through potentially closing or rolling, for example. We got a 26.28 Mara. So we think about the anti-dollars, Bitcoin, the anti-dollar, Bitcoin. Well, Bitcoin is up a little bit today, 1.73%. Did you know the Bitcoin halving that happened a couple weeks ago? The rate of growth of Bitcoin being mined is now halved. It's actually going to grow at less than 50%, the supply, less than 1% a year. It just got halved, right? 50%. We're looking at less than 1% Bitcoin growth a year from here on out until eventually all Bitcoin is mined. And then there's no additional supply coming on. Gold, the supply of gold increases about 1% a year. Bitcoin is now poised to have a slower rate of supply growth than gold, or is. What does that mean for Bitcoin? Again, Bitcoin's been a more volatile, more speculative investment or trading vehicle. It hasn't exactly been the store of value we probably hope for like gold is. But stocks like Mara today up 17, 18%. We're looking at this on a spread way back here as a short squeeze. We dipped, we rallied, we dipped again. And then all of a sudden today, the spread we were walking through back a couple weeks ago was an 18.20. That's through the spread. When I was going over my session earlier today, the discussion with trade price we talked about was 57 cents is now trading at $1.11, and you can roll that sucker out of the money at 23.25 for about 47 cents earlier in the session today. This ball may keep rolling as Mara has a high short interest stock. If we're running for cover, if we're talking about a weak dollar, stronger Bitcoin, stronger gold, Mara may see the squeeze. Could we see 30 again? Absolutely, we could. And again, the trade we talked about today during my session, feel free to join us during the day. But again, 23.25 out here. So buy, we'll go deep and wide. Deep and wide, 1 month, 2 strike vertical. 23.25 is going for 49 cents right now. You risk 49 to make what? To make about $1.50. Notice in this one, you're buying 118% vol. You're selling 121% vol. I don't care about the overall level of volatility. It's the difference. It's a +3. You're buying an option that has 3% less implied volatility than the one you're selling. This makes the spread cheaper and why you're paying less than 50 cents. And again, the one we walked through back here off of the lows, somewhere down here, again, breaking into the money right now, it's just reflective of what? That cheap spread now going from 57 cents to $1.11 as it goes through the spread. If it goes through 25 en route to 26.50, you could readily close that spread out for over 100% gain for that June expiration. So where do you look? Are you looking anti-dollar? I mean, oil right now, again, News out of the Middle East did not move it a lot, but with the backwardation environment in the oil futures we looked at, oil prices are potentially going to surge. And again, if oil prices are surging, it's probably on diminished supply expectations, which is also helping to propel natural gas stocks as well. I'm going to throw out another commodity stock in Alcoa today. Alcoa, in the verge of breaking out the 52-week highs here. We tested it. We backed off at low volume. You may want to see the breakout before you consider it. But today it was a 10 May expiration out of the money at the $40 strike price for this week. And again, look at the volatility. It's rising as you go out of the money. What if you went out further, 46 days? Again, rising volatility, positive skew. This is the kind of stocks you can buy and sell further out of the money on the call side. And again, we're testing 52-week highs. Feel free to see if we can break through that, right, as a trigger. But again, we're seeing in this event, the 10 May expiration, where the $40 strike price is being bought out here, mostly bought at the 40. Okay, that creates a gamma level. We start to take out 38 and a quarter. We close a new 52-week highs. That could be a potential entry, and buying an out of the money spread out here wouldn't be reasonable. Because let's be honest, the market's not on sure footing, right? The fact that we're looking at potentially inflation coming off a little bit, the mission accomplished is going to be through what? Less jobs, lower wages. And what does that mean for the S&P generally? They don't want to say it, but it's not exactly the most bullish result. We look at the trade flash in the S&P, 1.1 million shares sold at 511.30. Well, notice we never trade 511.30 here. I think this does pull in probably some dark pools data here. So might have traded, you got 2-day delay, upwards of 2 days delay before you start to see it. But 511.30, this creates a level. We're at another pretty significant level going back to March 20th, where we had 1.16 million shares traded. I don't care bought or sold. That's the level. We did break through it here. We'll see if tomorrow we can hang on or we break below. Maybe we find support here. We break that. We're looking to go back to 505. We break that. We're looking to go back to 495 and so forth. There is not a lot underpinning the market up here, right? We've not traded a lot. We've had a couple of weeks in here that's creating some level of support that we start to break through. We're going to quickly close down very sharply. And folks, I got a lot of stuff drawn there. We start to close down. We may see 4,600, 4,400, right? The downside still remains intact. The volatility, we look at the 3-month VIX to the 1-month VIX, and what do we see, right? This turned down today, but we're about 1.11. We never got down here below 1. We never fully reset. Skew never came down below 130, ideally down that 115 to 120 area. We still have our dukes up. Volume is low. Again, does not mean the market can't go higher, but you've got to be careful here. Now, here's the other side of it. The market has a tendency to return to what worked previously, right? What worked previously is an NVIDIA. This is the Tommy Boy. This is the guarantee on the box. Yes, you have all the implications of the guarantee fairy, but we may retest our prior highs at 971 again. This can help the market lift. Certainly Microsoft and Google, for example, these companies may make back. I mean, to be honest, the earnings for Microsoft were pretty good. The guidance was good. Microsoft may retest prior highs. Talked about Google on Friday during our Theo live session, which is for everybody. It's on YouTube. We post it live there, and we answer questions, etc. We talked about Google retesting prior highs. Tesla retesting prior highs off of earnings momentum. But just remember, right? This bull is a transient bull, right? We don't know what it holds. We don't know how strong it is. This raging bull that you might be thinking of could be Ferdinand. Looks strong on the outside in the end. Just wants to pick flowers. And boy, this may be the case as we get rolling back to prior highs. Watch the volume on the ES. See if volume continues to taper off. It's showing that the bull is losing strength. If skew remains high, if we don't see real volatility selling and skew dropping, we know something is amiss here. And again, be careful, right? But again, those dollar sensitive areas, particularly the commodity space, really jeopardizes the Fed's narrative of keeping inflation under control. I realize that food and energy are not something they really look at, but they do, right? If those remain peaked, we see job weakness. Watch the weekly jobless claims. Again, this creates a condition for the next sell-off because we never really hit that selling climax in this last go around. Looked like we might start to begin to get there back on the 18th, but it fizzled, right? With the data, we fizzled with the potential news of an attack, of a proliferation in the Middle East. That's still, by the way, still on the table. But again, we never reached the point where NVIDIA sold. And this is not about fundamentals. This is about holding up in a stock that cannot fail me. This is the guarantee fairy playing out. And believe me, NVIDIA has failed many, many times in the past when people thought they could not. You could go back here to 2018 after the cryptocurrency craze. Certainly, we had the chip shortage of 2021 that fizzled out before rallying again. We've yet to see the next correction in NVIDIA, and that's what we got to see to feel real strong about the bot market bottoming. And again, maybe that occurs simultaneously with a recession. Maybe it's not. You don't know what's going to happen. But again, we know that we just did not hit that selling climax that you want to see. And the declining volumes on the S certainly call into question the legitimacy of this, right? But there's ways to play it. And we just went through several examples on the bearish side, stocks like Dollar General, for example. There's plenty of stuff on the retail side that's playing into the consumers. Target, both these stocks had bearish option activity today, and also eBay as well. We're looking for a break of support here, double top creation eBay. On the flip side, though, high short interest stocks like SoundHound breaking out. This is an AI play. They've got earnings coming up. The great thing about these high short interest stocks is that, again, they have rising vol structures, generally speaking. Let's see, we got 46 days out. You could buy a 550 and sell a 7. Buy 90, sell 103. Can it go to 7 in a short squeeze? Absolutely it can. You risk very, very little for the prospect here of a big potential with 35 cents on a $1.50 wide spread is not terrible. And it's just based on a short squeeze. So we can look at those high short interest stocks, dollar sensitive commodity type plays, gold, silver, oils, the development there as well, producers specifically. And again, we can look at the bearish side on the retail space, particularly the consumer sensitive areas. And again, the short interest stocks like SoundHound, et cetera, could be opportunity stocks like Square that had that announcement last week that they're getting investigated. Snapping back, making back the losses here. Look at this channel. We start to break out. Square today, there was May 78 traded up here. So again, near-term target, we could see 80 very quickly on Square as well. Well, folks, wrap it up there. We'll catch you back on the video next Monday. I hope you have a great week. Thank you.